Hey, welcome to Get Rich Slow with John Wolf. Crazy how much is going on, and I want to share some of that important stuff for you. Two pieces. There is some very bright news if you missed the refinance boom on the horizon, and if you are in danger or think you might have trouble doing your mortgage payments, I want to go over some details about that with you because we want to avoid that entirely. So I'm a loan officer in Oregon and Washington at Caliber Home Loans. And first, I want to talk to you about the effort that's going on to make sure that people don't get late or behind on their mortgage. So Caliber Home Loans specifically, but honestly, the industry in general, whoever's servicing your home loan, you should be able to go on their website or call them if you are sincerely going to have trouble making your April, May, June, July, etc. payments. What's going to get set up after they review everything that's going on is they might give you 1, 2, or 3 months, potentially more, off of your mortgage payment. Now this, just to be clear, because I see some people not being clear about this on the internet and even on the news, you will not be receiving any free money. What's going to happen is you pause the payment and then you're going to end up repaying all of that money with the additional new interest that arose from you not staying on the payment schedule you were supposed to. And what it will end up looking like is if you, for example, skip 1 or 2 months, you might have the option of paying a few $100s extra a month for the next year or two to make up for that. Or probably more common, and it sounds kind of crazy, but this is how the math actually works. They might tack on, 12 or 24 months payments on the end. In either case, call long before you miss a payment, please, because if you miss a payment on your mortgage, it's going to be an atom bomb onto your credit, and you're going to have a lot of trouble getting home loans in the future for quite some time, as well as refinancing. And also, you will have things like your insurance rates go up, auto loans will go up, your credit card interest will go up. It's just bad all around. But by doing one of these plans, you avoid all that, and there is a really good chance that you could end up saving a ton of money by refinancing later out of the exact math problem that this payment deferment caused anyways. Next, let's talk about something positive, because I'm a guy about making gains, not just about avoiding gains. So here is the live raw bond market, and I went around and called all my clients right between here, the 24th, and here, the 9th of March, and I locked everybody in I can. Just a little bit about reading these graphs. Green and up means interest rates are going down and the mortgage-backed securities are becoming more valuable. Red and down means that interest rates are going up and mortgage-backed securities are becoming less valuable. I know that seems backwards. And then you have this solid area. That's the area, that's the price range that during the day trading took place at, where there were at least a significant number of actual purchases of bonds back and forth. And you see these whiskers, and down over here, these whiskers, which are the little up and down lines, are very small, and up here they're huge. So the whiskers are the area at which people were actually doing buy and sell orders, but where there was not at least a significant trade volume. Although there probably were some bonds bought and sold way up and down these whiskers. And right up here are carats, and the carats aren't actually inherent to the bond market, but I pay for a service that literally calls my phone. I got this call 11:43 a.m. That's Pacific time, so early in the morning, and it was like, dude, rates are going to get bad, lock your loan right now. So I literally I think I locked 3 loans right there. And then what happens, as soon as the mortgage companies realize that the pricing is getting a lot worse for them on this back end, they actually close your ability to lock loans, and then they open it back up at a much higher interest rate. And that's happened a bunch of times. Anyways, you can see way higher rates and then back up, Fed stimulus, way back down. Oh no, the Fed stimulus went away, way back up, the Fed stimulus. And when there's big up and downs, the analogy I like to use is You know how when you hear the price of oil goes up, the price for gasoline at the station immediately goes up, but if you hear that the price of oil goes down, the price at the pump, at the gas station, does not go down immediately, and that's having to do with volatility. Basically, the guy running the gas station has to be sure that when his big gas tank in the ground is empty, he has enough cash from selling the last one that he can buy the next one. It's not really just profit seeking. It's making sure that if the price swings back up, before he gets his order in, he can fill up still. And that's why you see, prices return down slowly. And especially right now, this volatility is huge. So that's making a lot of companies nervous. What I do think is going to happen, and my advice for everybody who thinks they missed out in this, fantastic refinance boom right here that ended Monday morning, March the 9th, get your entire loan file in. I'd love it if you gave it to me, and have it set up so that I can lock exactly at the right moment. But don't lock right away. Just get it all set up. And I think that this low APR and rates that we had right here are coming back. Anyways, I hope that you have an awesome day. If you would like me to share more about the underlying kind of financial forces that shape everything, or if you have questions about the graph or locks and interest rates or anything like that, I have a lot in my channel, and also I would love to answer specific questions. Have an awesome day. Again, like, share, subscribe, and spread the word. Have an awesome day. Bye.